Hey guys, I just want to take a minute of your time and discuss the 2-1 temporary buy down. Maybe you're a buyer that's a little bit hesitant, a little bit concerned, a little bit worried about where interest rates are at right now, the affordability of buying your home right now and what that would look like. If that's you, the 2-1 buy down is for you. So what is the 2-1 temporary buy down? The 2-1 temporary buy down gives you an opportunity to take advantage of a lower interest rate for the first 2 years of your 30-year mortgage. The way it works is the first year of your mortgage, your interest rate is going to be 2% lower than whatever your fixed rate is locked in at. The second year, it's going to be 1% lower than whenever your rate's locked in at. And then at the start of year 3, through until year 30, or until you sell, refinance, or pay off the loan, it's going to adjust up to that 30-year fixed rate, whatever you locked in at the start of your mortgage term. And so let me give you a scenario. It's easier to see it if we go through a scenario. And the following one on the screen is based on these parameters. It's important that you know that this isn't maybe going to be for your specific situation, but for this hypothetical situation, it's based on a $300K purchase price. It's based on a 5% down payment, a 760 credit score for a single family home that's going to be this borrower's primary residence. If somebody came to me today with that situation, I could go to them and say, we can get you locked in today for 7.625. That's going to be your 30-year fixed interest rate for the duration of your mortgage. The 2-1 buy down gives this person the opportunity, instead of having 7.625 for the first 2 years of their mortgage, the first year of their mortgage, they would be able to get an interest rate of 5.625. The second year, as we explained just a minute ago, it's going to adjust upwards to 6.625. And then at the start of year 3 through to year 30, it's going to stay at that 7.625, like I said, until they refinance, sell, or pay off the home. So what are the savings like on this? So if you look at principal and interest, this isn't the full mortgage payment. Most of the time, if you escrow, it's going to include your taxes, your insurance, maybe flood or HOA, but just solely for principal and interest. So 7.625 for a $300K purchase price, 5% down, 760 credit, single family home, primary residence, your principal and interest is going to be $2,017.21. The first year, whenever you're 2% lower than that, your principal and interest is going to be $1,640.62. That's a savings monthly of $376.59 a month. That's your electric bill, that's your Wi-Fi bill, that's your water bill. That's money that you can save to put towards other things in your budget. Across the year, that first year, you're going to save about $4,519.10. That second year, these numbers pretty much just cut in half. You're going to save that second year about $192.33 a month on that monthly payment. Your total savings that second year is going to be $23.07.91. So there's great savings to be had here. The idea behind it is our hope, our desire, our wish is that interest rates will drop. And if they do, instead of having to wait and take that 30-year term at 7.625, after 6 months, if rates are lower and it's a benefit to you, we can look into a refinance. And instead of having a temporarily lower interest rate, we can see about getting you a permanent 30-year fix, lower interest rate. This is just a way to make the home buying process more affordable for you as you take the steps to buy your new home. And so if you're interested, please reach out to me. The way to take advantage of this is really quite simple. If you've got a phenomenal realtor, there's a lot of opportunities to get seller concessions right now. Roughly on average, and this isn't for everybody or for every situation, but on average, it costs between 2.2 and 2.5% in seller concessions. Have the seller cover this, have the seller pay for this, have the seller put those funds towards you having the opportunity to do this 2-1 temporary buy down to where it's at no cost to you, and you get to save $4,500 and some change the first year, $2,300 and some change the second year. And then the idea behind this is at the end of that 2-year period, our desire, our wish, and our hope is that rates drop to where you can refinance into something more permanently at a lower interest rate. But this gives you an opportunity to take advantage of a lower interest rate even whenever market rates are higher. So instead of locking in today at 7.625, you would still lock at that interest rate, but you would be able to take advantage for the first year of 5.625, the second year at 6.625, and then it would adjust at that 3-year mark up to your full term, which is 7.625, and remain there until you buy, sell, or pay off the home. If you're interested in learning more, please give me a call, reach out, text me, call me, email me, whatever way you want to reach out. Reach out at theirishLender.com. It has all of my contact information. I would love to discuss with you some more about some cost-effective ways to make the home buying process more affordable and get you into your new home. All the best, and see you on the next one.